Welcome to the Explainer. So today we're digging into the dramatic Bitcoin price correction we're seeing in early 2026. After a truly massive run-up, the market is in what feels like a free fall. And, everybody is asking the exact same question.
It really does feel like a lifetime ago, doesn't it? But just a few months back, in October of 2025, Bitcoin absolutely smashed through its all-time high. And this wasn't just your regular retail hype. This was the era of massive institutional investment, really driven by those new spot ETFs. But wow, since that peak, the market has been going through this brutal reset. I mean, the price has just plummeted by nearly 50%, completely wiping out all the gains that were made since the election cycle back in late 2024. And that, of course, brings us to the one crucial question on every single investor's mind. So in this explainer, we are going on an investigation. We're going to use technical charts, on-chain data, and even some institutional clues to try and find an answer. Okay, let's dive right in. Our first set of clues, well, they come directly from the price chart itself. And I want you to think of these key levels not just as numbers, but as actual battle lines where the future of the market is being decided right now between the buyers and the sellers. So analysts have basically mapped out this clear hierarchy of these support zones. As you can see, each level corresponds to a completely different market sentiment. It creates a sort of roadmap of potential outcomes from, just a brief scare to a full-blown capitulation. The first and most immediate battle is happening as we speak, right around that $70,000 mark. Now, this isn't just some random round number. It was a major peak way back in July of 2024. Holding this line is absolutely critical to prevent widespread panic from setting in. Now, if that $70,000 floor gives way, all eyes, and I mean all eyes, will shift to $68,000. This level represents the 200-week moving average, which historically has been the ultimate dividing line between a continued bull market and the start of a long, cold bear market. And what if things get really ugly? Well, the next major zone is way down at $58,000. This is what's considered a deep value area, a level that's derived from its previous major uptrend. It's where those long-term, high-conviction investors are expected to finally step in and say, okay, that's it, enough is enough. All right, let's move on to our next set of clues and see how this story builds. Now, we're going to go under the hood of the network itself, using on-chain data to see what investors are actually doing with their coins. You see, on-chain analysis gives us this really powerful lens by splitting the market into two totally distinct camps. You've got the newer, more skittish short-term holders, and then you have the seasoned, diamond-handed long-term holders. And right now, their behaviors could not be more different. And here's the problem. The average price that those short-term holders bought in at is a staggering $96,500. So with the price now struggling at $70,000, pretty much every single recent buyer is deep in the red. And that creates this immense pressure to sell and just cut their losses. This whole dynamic is creating a fascinating changing of the guard. What we're seeing is the oldest, largest whales are selling off, while a whole new class of institutional smart money is stepping in, aggressively using this downturn as a strategic opportunity to build up their positions. Finally, the on-chain data gives us something called the network's realized price. At $55,800, this represents the average price at which every single coin last moved. You can think of it as the ultimate cost basis for the entire market, a true macro floor where even long-term capital would likely re-engage with some serious force. Okay, for our third clue, we have to investigate the most powerful new force in this market cycle: the institutions. They aren't just participating anymore, they are creating entirely new support structures that have just never existed before. So what's this quote about? Well, that number, $76,000, is the average purchase price for MicroStrategy. The massive corporation that holds over 700,000 Bitcoin on its balance sheet. Their consistent buying during these dips creates a really powerful psychological and technical floor for the entire market. Now, looking ahead, a massive potential catalyst is something called the Clarity Act. This is a landmark bill that's expected in 2026, and it's designed to finally end all that regulatory uncertainty in the United States. By setting clear rules for jurisdiction, exchanges, and stablecoins, it aims to create that predictable environment that large institutions absolutely require before they can fully commit their capital. So here's the bottom line. By providing that legal certainty, this act could basically function as an institutional shield. It would remove this huge barrier of risk, and that could potentially unlock a tidal wave of new, conservative institutional capital that's just been waiting on the sidelines. Let's zoom out now. For our final set of clues, we really have to consider the wider economic weather system. Because let's be real, in 2026, Bitcoin does not exist in a vacuum. It is deeply intertwined with global markets. And the macro picture is, well, it's mixed. You've got a strong US dollar and this stubbornly high inflation, and those are creating significant headwinds for risk assets like Bitcoin. But on the other hand, the market is also anticipating that the Fed will start lowering interest rates later this year, which could provide a really powerful tailwind. And this really matters because we're seeing a major capital rotation in the markets right now. Money is flowing out of tech and into so-called real assets. And while Bitcoin is often called digital gold, it is currently in a direct fight with physical gold for those crucial safe haven investment dollars. Okay, we have gathered all the clues from the technical charts, from the blockchain, from the institutions, and from the macro environment. So let's bring it all together and see what the experts are actually predicting for the rest of 2026. And what you see right away is that the forecasts are incredibly polarized. The institutional consensus seems to see a strong recovery in the second half of the year, targeting new all-time highs. But some on-chain analysts believe we still need one more deep flush-out, potentially down to the low 60,000s, before a true, durable bottom is finally in. So what should you take away from all this? Well, this painful correction is much more than just a price drop. It's a shakeout, a necessary maturation phase that is clearing out all the speculative leverage and really paving the way for a more stable, institutionally driven future. You know, while the hunt for the absolute bottom continues day by day, maybe the more important question is this: how will this great reset fundamentally reshape the structure, the players, and the very nature of the digital asset world for all the years to come?